All right, it is February already. We finally have the full month of statistics for January. So we'll get into those. But the Super Bowl is over. DOGE seems to be in every news headline these days. The Fed met and they decided to keep their short term interest rate stable. And Valentine's Day is this weekend. So got a lot of information to go through right now, but looking forward to this year. As I've said before, I think it's going to be a good year. I don't know if it'll be a great year, but hey, good is good. So, as always, thank you for supporting the channel. Thank you for all the likes, the subscriptions. Please do subscribe and like this video. I will be bringing more information on the greater Sacramento area real estate market, keeping you informed as much as I possibly can, and then also giving you information about specific neighborhoods and any of our new listings that are coming up. So the Super Bowl is over. Traditionally, that is the last psychological holiday for the year before we start our spring real estate season. So whether you were rooting for the Chiefs or the Eagles or just rooting for the commercials, we can now start watching for an increase in the number of homes for sale. So there's a lot of financial volatility right now. So we're going to have to see how all of that plays out. Rates have actually been holding, mortgage rates have been holding pretty stable for the last year and a half, while they are not historically high, hovering around 7%. That is a lot higher than we've been used to in recent history. So it does feel a lot different when mortgage rates double, even though someone can say historically 7% is not bad. So as I said, the Fed left their short-term interest rate unchanged. Basically, that signals that the economy is still moving well and the economy is strong. It is not in need of another reduction in rates to help drive growth. However, there is also a concern that either things have been moving really well. Inflation has been increasing over the last few months since October. There's some discussion that the January numbers, once they're released, I think later this week, those may actually drop a little bit. So we may see inflation numbers ease. We might see CPI drop. Interestingly, per conferenceboard.org, in January, U.S. consumer confidence dropped, with 20.9% of consumers expecting business conditions to improve, down from 22.7% in December. Also, 18.7% anticipated worsening conditions, which is up from 17.3%. So anyway, interesting stat. Could it be an indication that we may not see a huge surge in real estate activity for this year or for this season? Remains to be seen. Obviously, that's a national number, and the local Sacramento market could do its own thing. So one thing that I do want to pay attention to in Sacramento is, I'm sure you've heard a lot about the return to office orders. A lot of companies are calling their employees back to the office after a few years of work from home. So that is not going to work for some people. May not be able to find a local replacement job. Or they may not want to commute, those 2, 3, or 4 days a week that they need to be in the office. So that may really reduce the demand that we see for buyers moving from the Bay Area this year. We might not see as many of those. So we'll have to keep an eye on that. There are some other financial and economic policies that are either in discussion or coming down the pipe that could impact the real estate market in both directions. Some could help spur some increased growth and demand. Others could potentially soften things up a little bit, or they might just cancel each other out. So as always, I'll be keeping a close eye on the market and the economy and other financial markets to see where is real estate going this year and keep you apprised of any changes that I see on the horizon. Diving into the local data now, this is for the Tri-County area. This is Sacramento, El Dorado, and Placer counties averaged. Home sales, or I should say available homes for sale, jumped by 8.4%. The pendings are up 19.4%, but the number of sales fell by 26.4%. Now, the number of sales is a lagging indicator that can be anywhere from 21 to 45 days behind. So I'm not surprised that we saw strong new listing and pending activity and lower sales activity, that should turn around next month, or I should say later this month for statistics review in March. So keep you in the loop on that one. Days on market jumped from 46 to 51 days. So taking a little bit longer to sell. Again, kind of a lagging indicator. List to sales price ratio. So homes get listed and they sell for what percentage of that list price? The Tri-County area is holding stable at 96%. The median sales price in the Tri-County area dropped 2.7%. So that is down to $575. However, that is still up 3.6% from $555 in January of last year. So overall positive. The average sold price dropped by 3.3%. So kind of an interesting difference there between the median and the sold price. We'll keep an eye on those. And usually they track fairly close together. So the months of inventory, now this is based on the number of closed sales, absolutely skyrocketed in January. So it's up by 48.6%. However, that's still only up to 2.4 months. So we are still solidly in seller's market area. I would want to see that months of inventory get up above probably 5.5 to 6 months before we'd be discussing the possibility of really being in a buyer's market. So we'll keep an eye on that. And that should balance out as well as we see the number of sales pick up and balance out with the pending and active activity. So in Placer County, we'll get a little more close to home here. The number of homes for sale increased by 10.4%. Pendings jumped by 41.9% in Placer County. That's huge. However, the sales are down by about 33%. So again, for this time of year, January is usually an odd month. We'll see how things start to come together once we do the review for February numbers. So time on market in Placer County increased from 56 to 60 days. Still fairly quick. I remember in the market crash when, a lot of homes were taking 120, 140, 160, 180 days or more to sell. So 56 to 60 days, not too bad at all. We'll see that coming down a little bit as demand and market activity increases as we head into, March, April, May months. So in Placer County, the median sold price increased from December to January. So it went from $637,000 up to $650,000. The average dropped just by 1.2%, but the median did increase. Homes, the months of inventory in Placer County, wow, went from 1.7 to 2.8 months. So that's a huge increase as a percentage. But again, only 2.8 months of inventory were still solidly in seller market category. So we'll see how that trends for the spring season. I know, yes, we are still technically in winter, but this for us in the real estate market, this is the beginning of our spring season, basically right after Super Bowl. So overall, I'm seeing good buyer demand out there. A lot of sellers are getting prepped to get their homes on the market. So it seems like it's going to be a solid year this year. Personally, I do think we're going to see a repeat of 2024 as far as sales numbers, sales volume, probably price movement, value movement. We'll see how that goes. Rates could have some impact on that. If mortgage rates do come down later in the year, that remains to be seen. So if you're considering buying or selling this year, give me a call. I'd love to set up an appointment. We'll go through your specific needs and your specific timeline and put together a plan that's going to help you achieve that goal this year. So welcome to the new year. Thanks for all your support, and I'll be back next month with more market data. Thanks.